Let's move on though and talk about Tata Motors because that's going to be the focus on today's BNSN Lens. Remember, the company posted higher than expected losses in the first quarter, in fact double what was expected by the consensus estimates, and it has essentially reiterated that the global chip shortage and uncertainty due to the COVID-19 variants is likely to cause impacts on the business in the near term. It has posted revenue above and EBITDA in line with expectations. So let's get in our guests for today. We've got Kunal Bothra and Rajesh Agarwal joining in. Kunal, I want to start with you. It's gaining about 0.5% in trade today, but it's been a bit iffy of late. What do you say that one should do with Tata Motors based on what you're seeing on the charts?
So yes, Tata Motors has been one of the few stocks which has done exceptionally well over the last 12-13 months, but somehow over the last 1.5 odd month, in 3-4 weeks approximately, the stock has gone through a lot of I would say selling pressure, events, news flow, etc., which is surrounding the stock prices. So I think that's been one of the major reasons of overhang for stock for Tata Motors. Even the near-term charts, for example, for Tata Motors, is still indicating that the stock is going through a bit of a grind. In fact, what I've mapped up is in the charts for Tata Motors compared to one of the major swing indicators, and these are the kind of swing indicators which tends to have effect on the stock price for at least 3 to 4 months. So I think purely on that aspect, I would expect some sort of a I would say downward drift continuing for Tata Motors, even though the stock is rallying. I believe that minor rallies for Tata Motors could be taken as opportunities for creating either fresh shorts or trying to exit positional longs and the ones who have been holding up from much lower levels for the stock price. So I believe Tata Motors could be a candidate which may go through some bit of more grind over the near term, at least for the next 2 to 3 months. I believe that the stock would go through a bit of a downward trend. 275 is the first and immediate short-term support for Tata Motors, and I think if the stock happens to come back to that level, then I believe maybe a buy and dips approach could probably begin at those levels.
Rajesh is joining us as well. Kunal, sorry, good morning to you first of all, and Rajesh, good morning to you as well. But Rajesh, what Kunal says is going to be a grind over the next 3 months or so on the charts, but likely for the company as well, because Jaguar Land Rover is not going to, get the benefit of improved supply of chips anytime soon. The expectation is that it could well last into next year, the shortage of chips. And therefore, despite the fact that it has a reasonably strong retail order book, we're looking at a problem on the earnings front for at least a couple of quarters, or at least a quarter, if not two. So what does the retail investor have to bear in mind?
Good morning, Alex. The problem with Tata Motors is from the very long period of time, maybe 5-6 quarters or even more than that. If you look at that, there have been issues regarding their huge debt, their JLR issues and other things. And yesterday's post-market results were pretty bad, I would say, and they have added to the problems. If you look at the number, they reported a huge net loss of 4,450 crore. Both GLR and standalone business continued to be loss-making. If you look at GLR alone, the pre-tax loss of 110 million GBP and a free cash outflow of 996 million GBP is massive. Even the standalone business reported a loss of 3920 odd crores. So see, these things are not speaking of a very good future for the company in the near future. Even the management has very categorically said that there is a huge shortage of semiconductors, and they don't foresee a very dynamic or any solution for the semiconductor shortage in the near future. And adding to that is the price and inflation for raw materials and the pandemic uncertainty in the short term. So all in all, things are not very good for Tata Motors, and I would go with Kunal's view that any rise in the stock should be taken as an opportunity to get out of this stock. You have better opportunities in auto, maybe a Maruti in four-wheeler and or a Bajaj Auto in the two-wheeler, are very good companies to invest in for a longer-term horizon. Even a smaller company like Force Motor is better placed than what Tata Motors is at now. So I would say don't panic to get out in a hurry, but keep a target that whenever your price comes or investors' price comes, there is an uptick in the stock prices. One has to take a target of getting out of this stock. So I would say sell on rise kind of strategies would be a better thing to follow.
All right, we'll leave this conversation at that, but on the other side of this very short break, we will be back to answer all of the queries that are already piling up on social media. Be right back.